Let's get ready for the Connecticut real estate exam with 100 questions covering the state-specific laws, principles, and practices you'll need to know. And don't miss what's happening in the bottom corner. It could be key to your exam prep. We'll tell you how in a minute. Now let's get started.
Let's begin with a review of Connecticut real estate law and practice. Fair housing laws in Connecticut. Which federal act prohibits discrimination in housing based on race, color, religion, sex, handicap, familial status, or national origin? Is it A, Civil Rights Act of 1866, B, Fair Housing Act of 1968, C, Americans with Disabilities Act, or D, Rehabilitation Act of 1973? The answer is B, Fair Housing Act of 1968. The Fair Housing Act of 1968, part of the Civil Rights Act, expanded housing discrimination protections to include several protected classes, making it unlawful to deny housing based on race, color, religion, sex, handicap, familial status, or national origin. In Connecticut, which department is primarily responsible for enforcing fair housing laws? Is it A, Connecticut Department of Housing, B, Connecticut Commission on Human Rights and Opportunities, CHRO, C, Connecticut Real Estate Commission, or D, U.S. Department of Housing and Urban Development? The answer is B, Connecticut Commission on Human Rights and Opportunities, CHRO. The Connecticut Commission on Human Rights and Opportunities enforces fair housing laws within the state, addressing complaints of discrimination in housing and ensuring compliance with both state and federal statutes.
Have you noticed the code in the bottom corner? Next time you're stumped, take that code to birdsey.ai for immediate help and a free study session with Birdsey, your personal AI study partner. Plus, you'll get access to hundreds of additional questions, helping you move closer to passing your exam with confidence. The next time you're feeling unsure or stuck, give it a try.
What is a landlord in Connecticut prohibited from doing under fair housing laws? Is it A, setting rent levels, B, discriminating against a tenant due to disability, C, declining to rent to pet owners, or D, charging a higher deposit for families with children? The answer is B, discriminating against a tenant due to disability. Under Connecticut fair housing laws, discrimination in housing based on disability is prohibited. Landlords must make reasonable accommodations to afford persons with disabilities an equal opportunity to use and enjoy housing. Which of the following actions is legally permissible under Connecticut fair housing laws? Is it A, refusing to rent to individuals under 30, B, providing different rental terms based on national origin, C, evicting a tenant for non-payment of rent, or D, advertising a property as ideal for singles? The answer is C, evicting a tenant for non-payment of rent. Connecticut fair housing laws allow landlords to evict tenants for legitimate reasons such as non-payment of rent. Actions based on discrimination, preference, or exclusion due to protected characteristics are prohibited. Under Connecticut fair housing laws, which group is not explicitly protected? Is it A, students, B, families with children, C, age, or D, gender? The answer is A, student. Connecticut fair housing laws protect against discrimination related to race, color, religion, sex, family status, disability, and national origin, among other characteristics. Students aren't a protected class under these specific laws. What is a key aspect of Connecticut's fair housing laws regarding advertising practices? Is it A, prohibit the use of discriminatory language, B, mandate all listings be bilingual, C, require listing agents to disclose property defects, or D, ensure properties are always toured by diverse individuals? The answer is A, prohibit the use of discriminatory language. Connecticut's fair housing laws, based on both state regulations and federal guidelines, prohibit the use of discriminatory language in advertisements to ensure all individuals have equal housing opportunities without bias. What must Connecticut landlords ensure to comply with fair housing laws and accommodate disabled tenants? Is it A, provide sign language interpreters for lease signings? B, allow reasonable modifications for accessibility at the tenant's expense? C, pay for all modifications necessary for accessibility? Or D, renovate all units to be fully handicapped accessible? The answer is B, allow reasonable modifications for accessibility at the tenant's expense. Under the Connecticut Fair Housing laws, landlords must allow tenants with disabilities to make reasonable modifications to their living spaces to ensure accessibility, though the costs are typically borne by the tenant. Real estate contracts in Connecticut. In Connecticut, which party typically holds the deposit in a real estate transaction? Is it A, the seller, B, the buyer, C, the real estate broker, or D, the mortgage lender? The answer is C, the real estate broker. In Connecticut, deposits are typically held by the real estate broker or an attorney involved in the transaction. This arrangement ensures impartiality and security of the funds until the deal closes or is legally resolved. What is a required feature for a real estate contract to be legally binding in Connecticut? Is it A, must be notarized, B, must include a signature from both parties, C, must be witnessed by 2 people, or D, must be completed within 30 days? The answer is B, must include a signature from both parties. For a contract to be enforceable in Connecticut, it requires essential elements such as mutual agreement, lawful consideration, competence of parties, and signatures from both buyer and seller showing consent. In Connecticut, how must amendments to a real estate contract be handled? Is it A, written and signed by whom it concerns, B, verbal agreement is sufficient, C, informal email communication, or D, approved only by the realtor? The answer is A, written and signed by whom it concerns. In Connecticut, amendments to real estate contracts must be written and signed by all parties involved, ensuring mutual consent and transparency for the modification to be legally binding.
If you're finding this helpful, please take a minute to like this video and subscribe to our channel for more practice exams, useful tips, and complimentary study sessions with Birdsey.
What does a financing contingency clause in a Connecticut real estate contract allow? Is it A, the seller to cancel if they receive a better offer, B, the buyer to void the contract if financing falls through, C, the lender to change interest rates, or D, the buyer to demand a lower price? The answer is B, the buyer to void the contract if financing falls through. Financing contingencies protect buyers by allowing termination of the contract without financial penalty if they fail to secure the necessary loan, thus safeguarding the buyer's interests in transactions where credit approval is a condition. In Connecticut, which document is primarily used to initially outline terms of a real estate transaction? Is it A, listing agreement, B, offer to purchase, C, deed, or D, title report? The answer is B, offer to purchase. In Connecticut, the offer to purchase serves as the initial formal document where buyers express their intent along with proposed terms and conditions, setting the stage for further negotiation and formal contract creation. In Connecticut, what is the role of a dual agency disclosure in a real estate contract? Is it A, it allows one agent to represent both the buyer and the seller, B, it requires 2 separate agents for the buyer and the seller, C, it mandates that the buyer and the seller must negotiate directly, or D, it is used to terminate an existing real estate contract? The answer is A, It allows one agent to represent both the buyer and the seller. In Connecticut, a dual agency disclosure permits an agent to represent both a buyer and seller simultaneously, provided both parties agree in writing, ensuring transparency and consent. Which of the following is a prerequisite for a lease to be legally enforceable in Connecticut? Is it A, it must be notarized, B, it must be in writing if for more than 1 year, C, it must involve a real estate attorney, or D, it must include a late fee clause? The answer is B, it must be in writing if for more than 1 year. Under the Connecticut Statute of Frauds, any lease for a period longer than 1 year must be in writing to be legally enforceable. Disclosures required by Connecticut law. What must a Connecticut real estate agent disclose to a potential buyer regarding property defects? Is it A, any known material defects, B, all historical repairs made to the property, C, the reason the seller is selling the property, or D, estimated future tax increases? The answer is A, any known material defects. Connecticut law mandates the disclosure of known material defects to protect consumers as outlined by the Connecticut Real Estate Commission. Which document includes the mandatory lead paint disclosures required by Connecticut law? Is it A, Property Condition Disclosure Report, B, Listing Agreement, C, Deed of Sale, or D, Offer to Purchase? The answer is A, Property Condition Disclosure Report. Connecticut law requires lead-based paint disclosures for properties constructed before 1978, ensuring buyers are aware of potential hazards. In Connecticut, what is the consequence if a seller fails to provide the residential property condition disclosure? Is it A, the buyer can terminate the contract before closing, B, the seller must credit $500 to the buyer at closing, C, the sale is automatically voided, or D, the listing agent is penalized? The answer is B, the seller must credit $500 to the buyer at closing. To promote transparency, Connecticut mandates a $500 credit to the buyer at closing if the seller omits the required disclosure. Under Connecticut law, when must agency relationships be disclosed? Is it A, at the time of the offer to purchase, B, before any substantive discussion about the property, C, during the open house, or D, immediately after signing the purchase agreement? The answer is B, before any substantive discussion about the property. To ensure informed consent, Connecticut law requires agency disclosure before substantive conversations about specific properties. What is the purpose of the Connecticut Property Condition Disclosure Report? Is it A, to list all known and unknown defects of the property, B, to inform the buyer about known property conditions affecting value or desirability, C, to provide a guaranteed appraisal value of the property, or D, to certify the construction quality of the property? The answer is B, to inform the buyer about known property conditions affecting value or desirability. The report allows buyers to understand known property conditions affecting both decision-making and legal liability as required by Connecticut law. What is a Connecticut real estate broker's responsibility regarding a stigma attached to a property? Is it A, they must always disclose it, B, disclosure depends on the buyer's inquiry, C, they should include it in the property condition report, or D, they must report it to the Real Estate Commission? The answer is B, disclosure depends on the buyer's inquiry. Connecticut law does not mandate the disclosure of stigmas unless specifically asked by the buyer, reflecting an emphasis on concrete property condition disclosures over subjective or reputation-based issues. Which of the following disclosures is required by Connecticut law when transferring residential real estate? Is it A, Environmental hazards report. B. Leasing arrangements with tenants. C. Residential property condition disclosure report. Or D. Information about local schools. The answer is C. Residential property condition disclosure report. The Residential Property Condition Disclosure Report is essential in Connecticut real estate transactions, ensuring that buyers receive detailed information about property conditions, enhancing transparency and informed decision-making.
Notice the code in the corner? When you're stumped by a question, enter it at birdsey.ai for immediate help. Enjoy complimentary study sessions and access to hundreds of additional questions to help you pass your exam with confidence.
Transfer of title in Connecticut. In Connecticut, what is a key characteristic of a quitclaim deed? Is it A. It guarantees a clear title. B. It only transfers interest the grantor has in the property. C. It includes promises regarding the condition of the property. Or D. It is commonly used in foreclosure sales. The answer is B. It only transfers interest the grantor has in the property. In Connecticut, a quitclaim deed transfers only the interest the grantor has, without warranties. It's often used between family members or to clear title defects without assurances of title quality or encumbrance-free transfers. What distinguishes a general warranty deed from other types of deeds in Connecticut? Is it A. It provides no title warranties. B. It guarantees title against claims throughout history. C. It transfers property without any warranties. Or D. It is only used for commercial properties. The answer is B. It guarantees title against claims throughout history. A general warranty deed in Connecticut ensures the grantee that the title is clear from any past issues, offering the most assurance by covering defects arising through all previous ownerships, providing the grantee with a high level of protection. Which document, recorded in the land records, gives constructive notice of a change in property ownership in Connecticut? Is it A. Title insurance policy, B. Property tax bill, C. Deed, or D. Escrow agreement? The answer is C. Deed. Recording a deed in Connecticut's land records provides constructive notice to the public of the transfer of property, thereby officially acknowledging the new ownership and protecting against prior unrecorded claims. What is necessary for a deed to be valid for transfer of property in Connecticut? Is it A. Grantor's signature, B. Grantee's signature, C. Attorney's signature, or D. Title company's seal? The answer is A. Grantor's signature. In Connecticut, for a deed to transfer property validly, it must include essential elements like the grantor's signature, which is a legal requirement to ensure the conveyance is intentional and authorized. Which type of deed is typically used in Connecticut to correct errors in a previously recorded deed? Is it A. Bargain and sale deed, B. Correction deed, C. Gift deed, or D. Special warranty deed? The answer is B. Correction deed. A correction deed in Connecticut is executed to rectify an error in a previously recorded deed. This deed restates the property interest and corrects inaccuracies, ensuring proper legal title conveyance. What is typically required for a deed to be properly recorded in Connecticut? Is it A. Notarization, B. Witness signature, C. Assessment, or D. Title search? The answer is A. Notarization. In Connecticut, a deed must be notarized to ensure the signer's identity is verified before the deed can be recorded in the public land records. This process ensures the authenticity of the deed. Which of the following is an essential element of a valid deed in Connecticut? Is it A. Grantor's signature, B. Grantee's marital status, C. Property zoning type, or D. Appraised value? The answer is A. Grantor's signature. For a deed to be valid in Connecticut, it must be signed by the grantor. This signature validates the transfer of title from the grantor to the grantee.
Notice the code in the corner? When you're stumped by a question, enter it at birdsey.ai for immediate help. Enjoy complimentary study sessions and access to hundreds of additional questions to help you pass your exam with confidence.
Earnest money and escrow in Connecticut. What is the primary purpose of holding earnest money in an escrow account in Connecticut? Is it A, to secure the listing agent's commission, B, to ensure the buyer's sincere intent to purchase, C, to cover potential property tax discrepancies, or D, to satisfy the seller's tax obligations? The answer is B, to ensure the buyer's sincere intent to purchase. In Connecticut, earnest money is held in escrow to demonstrate the buyer's commitment to the purchase agreement. It is a deposit made to a seller representing the buyer's good faith to buy a home. Who can act as an escrow agent for earnest money deposits in Connecticut real estate transactions? Is it A, the buyer's friend, B, a licensed real estate broker, C, the seller's attorney's spouse, or D, a creditor of the buyer? The answer is B, a licensed real estate broker. Connecticut law permits licensed brokers to act as escrow agents. The escrow agent is a neutral third party to ensure proper handling of earnest money pending the completion of the real estate transaction. Which document outlines the handling and refunding of earnest money in Connecticut? Is it A, purchase and sale agreement, B, property inspection report, C, buyer's credit report, or D, listing agreement? The answer is A, purchase and sale agreement. The purchase and sale agreement in Connecticut dictates how earnest money must be handled during a real estate transaction, including provisions for possible refund under specific conditions. In a situation where a real estate deal falls through, who decides the fate of the earnest money according to Connecticut law? Is it A, the escrow agent alone, B, both parties through mutual agreement or a court decision, C, the real estate broker, or D, the seller's discretion? The answer is B, both parties through mutual agreement or a court decision. If disputes over earnest money occur in Connecticut, both buyer and seller must reach a mutual agreement or seek court intervention to determine the deposit's resolution per contractual terms. What is the legal requirement for brokers upon receiving earnest money in Connecticut? Is it A, immediately deposit into a personal savings account, B, deposit into a designated escrow or trust account, C, hold in an unsecured cash drawer for easy access, or D, convert into a cashier's check within 24 hours? The answer is B, deposit into a designated escrow or trust account. Connecticut law mandates that brokers deposit all earnest money into a designated escrow or trust account promptly to ensure security and compliance with legal protocols. In Connecticut, under what circumstance can a buyer's earnest money be released from escrow? Is it A, only after the property inspection is completed, B, based on mutual agreement of the parties involved, C, automatically after 30 days in escrow, or D, upon seller's cancellation of the contract? The answer is B, based on mutual agreement of the parties involved. In Connecticut, the release of earnest money from escrow generally requires a mutual agreement between the buyer and seller. Disputes concerning release are usually subject to legal resolution or arbitration, depending on the contract terms. What must a real estate broker in Connecticut do if there is a dispute over the earnest money? Is it A, automatically return the earnest money to the buyer, B, hold the earnest money in escrow until a written resolution is provided, C, transfer the earnest money to the seller, or D, donate the earnest money to a charity after 90 days? The answer is B. Hold the earnest money in escrow until a written resolution is provided. When a dispute arises over earnest money in Connecticut, brokers are required to hold the funds in escrow until they receive mutual written instructions from all parties or a legal resolution.
Don't forget to comment below with your tips, challenges, and thoughts on exam preparation. Your experiences can make a big difference for others.
Connecticut real estate taxes. Which organization is responsible for assessing property values for tax purposes in Connecticut? Is it A, Connecticut Real Estate Commission, B, local municipal assessors, C, Connecticut State Department of Revenue, or D, County Board of Equalization? The answer is B, local municipal assessors. In Connecticut, local municipal assessors are responsible for determining the value of properties, which serves as the basis for property taxation. This decentralized approach contrasts with some states where the State Department handles assessments. What is the primary purpose of a revaluation in Connecticut real estate? Is it A, to adjust property lines, B, to update property tax exemptions, C, to ensure tax assessments reflect current market value, or D, to renew property tax records every decade? The answer is C, to ensure tax assessments reflect current market value. Revaluation is conducted to match property tax assessments with current market conditions, thereby ensuring accurate and equitable taxation among property owners in accordance with Connecticut law. How often must municipalities in Connecticut conduct property revaluations? Is it A, every 3 years, B, every 5 years, C, every 7 years, or D, every 10 years? The answer is B, every 5 years. To maintain accurate property tax levies reflective of market conditions, Connecticut law mandates municipal property revaluations every 5 years, thus ensuring that assessments remain fair and up to date. Under Connecticut law, what is a commonly available property tax relief option for seniors? Is it A, homestead exemption, B, senior tax freeze program, C, veterans tax exemption, or D, eco-friendly home discount? The answer is B, senior tax freeze program. Connecticut provides various relief programs that vary by municipality, including senior tax freeze programs, which stabilize property taxes for eligible seniors against increases. What is the mill rate, and how is it used in Connecticut property taxation? Is it A, interest rate applied on overdue taxes, B, sale price multiplier for capital gains calculation, C, rate used to calculate property tax by multiplying it with the assessed property value, or D, percentage reduction on tax bills for early payment? The answer is C, rate used to calculate property tax by multiplying it with the assessed property value. The mill rate is critical in property taxation across Connecticut, determining tax amounts by expressing tax in mills. For instance, a property assessed at $100,000 with a 20 mill rate owes $2,000 in taxes. What is the acceptable period for delinquent tax sales to be held in Connecticut? Is it A, immediately after the tax becomes delinquent, B, at least 6 months after the tax becomes delinquent, C, exactly 1 year after the tax becomes delinquent, or D, within 3 months after the tax becomes delinquent? The answer is B, at least 6 months after the tax becomes delinquent. In Connecticut, a delinquent tax sale can occur at least 6 months after the delinquency of the tax to allow notification and potential settlement by the property owner. Connecticut real estate licensing and regulation. Which of the following is required to obtain a real estate salesperson license in Connecticut? Is it A, passing a background check, B, a 4-year college degree, C, membership in the Connecticut Association of Realtors, or D, Completion of a 300-hour pre-licensure course. The answer is A. Passing a background check. The Connecticut Department of Consumer Protection requires aspiring real estate salespersons to pass a background check, among other criteria. This helps maintain the integrity of the profession by ensuring only qualified individuals are licensed. What is the continuing education requirement for a Connecticut real estate salesperson to renew their license? Is it A. 10 hours every 2 years, B. 12 hours every 2 years, C. 20 hours every 3 years, or D. 15 hours every 1 year? The answer is B. 12 hours every 2 years. Connecticut mandates that licensed real estate salespersons complete 12 hours of continuing education every 2 years. This ensures that professionals remain informed about industry changes, laws, and practices. Who is responsible for regulating real estate licenses in Connecticut? Is it A. Connecticut Department of Consumer Protection, B. Connecticut Association of Realtors, C. Connecticut Division of Professional Licenses, or D. National Association of Realtors? The answer is A. Connecticut Department of Consumer Protection. The Connecticut Department of Consumer Protection is responsible for the regulation of real estate licenses. This helps ensure practitioners comply with state laws and maintain professional standards. How often must a salesperson renew their real estate license in Connecticut? Is it A. Annually, B. Every 2 years, C. Every 3 years, or D. Every 5 years? The answer is B. Every 2 years. In Connecticut, real estate salespersons need to renew their licenses every 2 years, coinciding with the completion of continuing education requirements as set by the state's regulatory guidelines. What is the primary objective of the Connecticut Real Estate Commission? Is it A. To promote ethical business practices, B. To license and regulate real estate professionals, C. To provide housing to low-income families, or D. To set market prices for real estate? The answer is B. To license and regulate real estate professionals. The Connecticut Real Estate Commission is chiefly focused on licensing and regulating real estate professionals, ensuring compliance with state laws to uphold public trust and safety in real estate transactions. Which of the following statements about the Connecticut Real Estate Commission is true? Is it A. It is responsible for setting licensing fees, B. It issues licenses to real estate salespeople and brokers, C. It handles complaints about landlord-tenant disputes, or D. It approves curriculum for home inspection courses? The answer is B. It issues licenses to real estate salespeople and brokers. The Connecticut Real Estate Commission is tasked with regulating real estate licensing, ensuring compliance with state laws. This includes issuing, renewing, and revoking licenses for salespeople and brokers. Connecticut Real Estate Commission under DCP. What is the primary role of the Connecticut Real Estate Commission? Is it A. To regulate loan qualifications for brokers, B. To oversee and enforce licensing requirements for real estate professionals, C. To manage fair housing compliance checks, or D. To develop real estate advertising guidelines? The answer is B. To oversee and enforce licensing requirements for real estate professionals. The Connecticut Real Estate Commission oversees licensing, ensuring compliance with state regulations. Its primary mission includes the protection of the public by enforcing rules governing real estate practice in Connecticut. Who appoints the members of the Connecticut Real Estate Commission? Is it A. The Governor of Connecticut, B. The Department of Consumer Protection, C. The Connecticut General Assembly, or D. The National Association of Realtors? The answer is A. The Governor of Connecticut. Members of the Connecticut Real Estate Commission are appointed by the Governor. ensuring that appointments are made by state leadership to oversee real estate activities under the Department of Consumer Protection. How many real estate professionals are required on the Connecticut Real Estate Commission? Is it A, 4, B, 5, C, 6, or D, 8? The answer is B, 5. The Connecticut Real Estate Commission includes 5 licensed real estate professionals to ensure balanced governance, focusing on real estate laws and practices within the state. What authority does the Connecticut Real Estate Commission have regarding licensees? Is it A, sheriff's license revocation powers, B, issue and enforce disciplinary actions, C, mandate brokerage advertising standards, or D, authorize home inspection procedures? The answer is B, issue and enforce disciplinary actions. The Connecticut Real Estate Commission can issue disciplinary actions to ensure that licensees comply with state laws and regulations, maintaining professional standards in real estate practice. What must an applicant complete prior to obtaining a real estate license in Connecticut? Is it A, a plumbing certificate, B, a real estate pre-licensing course, C, a fair housing workshop, or D, 3 years of property management experience? The answer is B, a real estate pre-licensing course. Applicants must complete a state-approved pre-licensing course to ensure that they possess the foundational knowledge required for professional real estate practice in Connecticut. Let's continue now with Connecticut real estate finance. Loan fundamentals. What is a primary purpose of the Consumer Financial Protection Bureau, CFPB, in the context of real estate finance? Is it A, to enforce anti-discrimination laws in housing, B, to improve transparency in the mortgage lending process, C, to regulate mortgage lender advertising, or D, to certify real estate professionals? The answer is B, to improve transparency in the mortgage lending process. The CFPB's role is crucial in protecting consumers by regulating financial products like mortgages, ensuring they are clear and fair. Its establishment was part of the Dodd-Frank Act post the 2008 financial crisis. Which document is used to pledge property as security for a loan? Is it A, deed, B, mortgage, C, promissory note, or D, purchase agreement? The answer is B, mortgage. A mortgage is a legal document that creates a lien upon the property as security for the repayment of a loan. The borrower retains ownership unless they default on the terms. In Connecticut, who typically holds the real estate during the term of a mortgage? Is it A, the mortgagee, B, the mortgagor, C, the trust, or D, the trustee? The answer is B, the mortgagor. In Connecticut, the mortgagor retains ownership rights until the mortgage is paid off or foreclosed. The mortgagee holds a lien, giving them a security interest in the property. What is amortization in the context of a mortgage loan? Is it A, the process of obtaining a home equity line of credit, B, the process of reducing a debt through regular payments of principal and interest, C, the evaluation period to approve a mortgage loan, or D, a method for accelerating mortgage payments? The answer is B, the process of reducing a debt through regular payments of principal and interest. Amortization is the systematic method used in loans to gradually reduce the principal balance through scheduled payments, covering both interest and principal over the life of the loan. What is the primary function of a promissory note in real estate finance? Is it A, to act as a security for a loan, B, to outline the conditions of borrowing and repayment, C, to represent ownership in a property, or D, to regulate the interest rates charged by lenders? The answer is B, to outline the conditions of borrowing and repayment. A promissory note is a legal document that retains a promise from the borrower to repay a specified amount over a designated period, including interest, acting as the borrower's personal obligation to the lender. What is the function of an escrow account in Connecticut real estate finance? Is it A, to hold funds for closing costs, B, to maintain reserve funds for maintenance, C, to hold funds for property taxes and insurance, or D, to provide a security deposit for tenants? The answer is C, to hold funds for property taxes and insurance. In Connecticut, escrow accounts are a crucial aspect of mortgage payments, designed to set aside funds for property taxes and insurance. This method ensures that these obligations are met, thereby reducing delinquency risks. Types. Which type of loan is backed by the Federal Housing Administration and is designed for low to moderate income borrowers? Is it A, the Federal Housing Administration FHA loan, B, conventional loan, C, Veterans Affairs VA loan, or D, jumbo loan? The answer is A, the Federal Housing Administration FHA loan. FHA loans are backed by the Federal Housing Administration. These loans are designed for low to moderate income borrowers who may have lower credit scores. An important aspect is their relatively low down payment requirement. What is the primary characteristic of a VA loan? Is it A, available to veterans, B, higher interest rates, C, requires large down payment, or D, restricted to high-income borrowers? The answer is A, available to veterans. VA loans are available to eligible U.S. veterans, active duty service members, and certain members of the National Guard and Reserves. They often come with favorable terms, including no down payment requirement. Which loan type typically requires private mortgage insurance, PMI, when the down payment is less than 20%? Is it A, the Federal Housing Administration FHA loan, B, conventional loan, C, Veterans Affairs VA loan, or D, U.S. Department of Agriculture USDA loan? The answer is B, conventional loan. Conventional loans require private mortgage insurance, PMI, if the borrower's down payment is less than 20% of the home's purchase price. PMI protects the lender in case of default. It's an added monthly cost for borrowers. What type of loan is specifically for properties located in rural and suburban areas? Is it A, U.S. Department of Agriculture USDA loan, B, the Federal Housing Administration FHA loan, C, conventional loan, or D, jumbo loan? The answer is A, U.S. Department of Agriculture USDA loan. USDA loans are insured by the U.S. Department of Agriculture and are explicitly designed for rural property financing. These loans often feature very favorable terms, including no down payment requirement. What distinguishes a jumbo loan from other types of loans? Is it A, larger than conforming loan limits, B, insured by Federal Housing Administration, C, only available to military personnel, or D, must be used for a primary residence? The answer is A, larger than conforming loan limits. Jumbo loans are specifically for loan amounts exceeding the conforming limits set by the Federal Housing Finance Agency. These loans often come with stricter credit requirements and sometimes higher interest rates due to their larger size. Which type of loan is specifically designed for veterans and active duty military personnel? Is it A, conventional loan, B, the Federal Housing Administration FHA loan, C, Veterans Affairs VA loan, or D, U.S. Department of Agriculture USDA loan? The answer is C, Veterans Affairs VA loan. VA loans are backed by the U.S. Department of Veterans Affairs, providing no down payment loans to eligible veterans and service members. They often offer favorable terms compared to conventional mortgages and help veterans purchase homes. Which type of loan generally requires a higher credit score and larger down payment but offers the borrower more flexibility with terms? Is it A, the Federal Housing Administration, FHA loan, B, conventional loan, C, Veterans Affairs, VA loan, or D, U.S. Department of Agriculture, USDA loan? The answer is B, conventional loan. Conventional loans are not backed by government entities, which often means lenders set higher credit and income standards. They can provide more flexibility in terms of loan amounts and interest structures, but require stronger borrower qualifications. Loan qualifications. What is the minimum credit score typically required by most lenders in Connecticut for conventional mortgage qualification? Is it A, 620, B, 580, C, 700, or D, 500? The answer is A, 620. Most lenders in Connecticut and nationwide require a minimum credit score of 620 for conventional mortgage qualification. Higher scores increase the likelihood of better loan terms. What debt-to-income DTI ratio is commonly accepted by lenders for qualifying borrowers in Connecticut? Is it A, 43%, B, 50%, C, 30%, or D, 36%? The answer is A, 43%. The 43% debt-to-income ratio is a benchmark used by lenders to determine the maximum portion of income that can be directed towards debt repayments while still qualifying for a loan. Which of the following income types is generally not considered when qualifying for a mortgage in Connecticut? Is it A, overtime pay, B, child support, C, unemployment benefits, or D, rental income? The answer is C, unemployment benefits. Unemployment benefits are generally not considered stable, reliable income for mortgage qualification purposes in Connecticut, as they are temporary and contingent on employment status changes. Which document is commonly required by lenders in Connecticut to verify a borrower's income when applying for a mortgage? Is it A, tax return, B, credit card statement, C, lease agreement, or D, marriage certificate? The answer is A, tax return. Lenders in Connecticut often request tax returns as part of the verification process to assess the borrower's income stability and reliability over time. In Connecticut, what is typically included in a pre-approval letter for a mortgage loan? Is it A, interest rate terms, B, amount of the loan, C, property address, or D, closing date? The answer is B, amount of the loan. A pre-approval letter includes the maximum loan amount a borrower can qualify for based on the lender's preliminary assessment of the borrower's financial situation. What is the role of the loan estimate in the mortgage application process in Connecticut? Is it A, it details the final closing costs and terms of the loan, B, it provides an estimate of loan terms and closing costs to a prospective borrower, C, it serves as a legal contract between lender and borrower, or D, it verifies the borrower's income for the loan application? The answer is B, it provides an estimate of loan terms and closing costs to a prospective borrower. The loan estimate, required by the Consumer Financial Protection Bureau, CFPB, provides key details about mortgage loans, including estimated interest rates, monthly payments, and closing costs, helping borrowers compare loan offers. Which of the following is not a typical requirement for mortgage qualification in Connecticut? Is it A, employment history for a minimum of 2 years, B, proof of homeowner's insurance, C, sufficient down payment, or D, acceptable credit score? The answer is B, proof of homeowner's insurance. While homeowner's insurance is crucial for completing a mortgage loan, it is typically not a prerequisite for qualification. The focus is on financial stability and the ability to repay the loan. The loan application process. What is the primary focus of the preliminary interview in the loan application process? Is it A, verifying the applicant's employment history, B, understanding the applicant's financial goals, C, determining the loan amount eligibility, or D, scheduling a home appraisal? The answer is B, understanding the applicant's financial goals. The preliminary interview is crucial in understanding the applicant's financial goals and housing needs. This helps lenders to suggest appropriate loan products tailored to the applicant's requirements. It sets the foundation before diving into deeper financial assessments. Which document is critical for proving an applicant's income during the loan application process? Is it A, property deed, B, credit report, C, pay stubs, or D, title insurance? The answer is C, pay stubs. Pay stubs serve as a primary source of income verification for lenders, detailing earnings over a specific period. This information helps in calculating the applicant's debt-to-income ratio and loan eligibility. What role does a credit score play in the loan application process? Is it A, determines the interest rate offered, B, assesses property value, C, replaces income documentation, or D, sets the term length of the loan? The answer is A, determines the interest rate offered. Credit scores are pivotal in the loan application process as they influence the interest rate and terms offered to the applicant. Higher scores typically lead to more favorable terms, indicating lower credit risk to lenders. Why might an underwriter request additional documentation during the loan application process? Is it A, to verify questionable information, B, to determine the appraisal value, C, to calculate property taxes, or D, to forecast future market trends? The answer is A, to verify questionable information. Underwriters play a critical role in verifying the accuracy of the provided information. They may ask for additional documents to address any discrepancies or confirm compliance with lending standards. This ensures the integrity and reliability of the loan application. What is the significance of the loan estimate document in the loan application process? Is it A, confirms the final loan terms, B, provides a breakdown of estimated loan costs, C, serves as proof of home ownership, or D, outlines the mortgage insurance requirement? The answer is B, provides a breakdown of estimated loan costs. The loan estimate is a vital document that offers a concise view of the loan's estimated costs, helping applicants compare different offers. It's mandated by the CFPB to enhance transparency and borrower understanding during the loan application process. What is the primary purpose of the Uniform Residential Loan Application? Is it A, to provide a standardized format for applicants nationwide, B, to determine the interest rate for the loan, C, to guarantee loan approval for the applicant, or D, to calculate the applicant's debt-to-income ratio? The answer is A, to provide a standardized format for applicants nationwide. The Uniform Residential Loan Application helps lenders evaluate loan requests by collecting consistent applicant data. It ensures all necessary information is collected uniformly, aiding in the loan approval process. During the loan application process, what is typically required to verify an applicant's employment? Is it A, a verbal confirmation from the applicant's manager, B, a written verification of employment from the employer, C, a testimonial from a coworker, or D, the applicant's business card? The answer is B, a written verification of employment from the employer. Written verification of employment provides lenders with confirmation of consistent employment, which is crucial in assessing the applicant's ability to repay the loan. It includes job tenure and income details. Underwriting for Connecticut real estate. What is the key factor underwriters consider when determining a borrower's ability to repay a real estate loan in Connecticut? Is it A, credit score, B, debt-to-income ratio, C, property type, or D, market interest rates? The answer is B, debt-to-income ratio. Underwriters in Connecticut focus on the debt-to-income ratio to assess a borrower's ability to repay. This measure ensures that the borrower can manage monthly loan payments alongside existing debts. It reflects both earnings and financial obligations. In Connecticut real estate underwriting, what role does the loan-to-value LTV ratio play? Is it A, it determines the interest rate offered, B, it assesses the borrower's creditworthiness, C, it reflects the size of the down payment, or D, it is used to calculate annual property taxes? The answer is C, it reflects the size of the down payment. The loan-to-value LTV ratio in Connecticut indicates the relationship between a loan amount and property value, highlighting the size of the down payment. It helps lenders assess the risk level associated with loaning against a particular property. What is the main purpose of verifying employment during the underwriting process in Connecticut? Is it A, to assess the stability of the borrower's income, B, to calculate potential property appreciation, C, to determine the property's value, or D, to ensure compliance with fair housing laws? The answer is A, to assess the stability of the borrower's income. In Connecticut, underwriters verify employment to ensure that the borrower has a stable source of income. This step confirms the borrower's ability to make consistent loan payments over time, thus minimizing financial risk. What does an underwriter in Connecticut assess when evaluating a borrower's savings and reserves? Is it A, the liquidity available for any unforeseen needs, B, the long-term appreciation potential of property investments, C, the borrower's ability to pay for renovation projects, or D, the historical rate of property tax increase? The answer is A, the liquidity available for any unforeseen needs. Underwriters in Connecticut evaluate a borrower's savings and reserves to ensure there are sufficient funds for emergencies or unforeseen expenses. This financial buffer is crucial in maintaining payment stability in times of financial stress. Which type of property is typically considered lower risk in terms of underwriting in Connecticut? Is it A, newly constructed homes, B, income-generating rental properties, C, owner-occupied primary residences, or D, vacation homes? The answer is C, owner-occupied primary residences. Owner-occupied primary residences are generally seen as lower risk by underwriters in Connecticut. Owners tend to maintain and care for these properties more diligently, lowering the likelihood of default compared to investment properties or vacation homes. Which factor is crucial for Connecticut underwriters when evaluating a property for loan approval? Is it A, property condition, B, real estate agent's reputation, C, property's historical significance, or D, local school ratings? The answer is A, property condition. Property condition is integral to underwriting in Connecticut as it impacts the home's appraised value and insurability. The state guidelines require accurate property evaluations to mitigate lending risks. How does a borrower's credit score impact the underwriting process in Connecticut? Is it A, affects loan interest rates, B, impacts property value, C, determines neighborhood safety, or D, influences escrow facilities? The answer is A, affects loan interest rates. In Connecticut, a borrower's credit score is critical in underwriting as it predicts financial reliability, thus influencing the interest rates and terms lenders may offer based on risk assessment. Loan closing. Which document must be recorded to provide public notice of a security interest in real property during a Connecticut real estate loan closing? Is it A, deed of trust, B, mortgage, C, promissory note, or D, title policy? The answer is B, mortgage. During a Connecticut real estate loan closing, the mortgage document is recorded to provide public notice. Recording statutes require this action to establish the lender's security interest and prioritize it over subsequent purchasers. What happens if a borrower fails to receive the closing disclosure 3 days before the Connecticut loan closing? Is it A, the closing can proceed as scheduled, B, the borrower can waive the disclosure requirement, C, the closing must be delayed until the requirement is met, or D, the lender may proceed with closing if they notify participants? The answer is C, the closing must be delayed until the requirement is met. Under TRID rules, borrowers must receive their closing disclosure 3 business days before closing to ensure ample time for review. Non-compliance requires rescheduling the closing. During the loan closing process in Connecticut, who is responsible for ensuring that all documents are correctly signed and executed? Is it A, the borrower, B, the closing agent, C, the lender, or D, the real estate agent? The answer is B, the closing agent. The closing agent plays a critical role, being responsible for ensuring all closing documents are accurately signed and executed, facilitating a legally binding transaction. What action must a Connecticut title insurance company take if the seller's lien release is missing at the time of closing? Is it A, proceed with closing regardless, B, issue a title insurance policy with exceptions, C, notify the lender and borrower to terminate the contract, or D, file an immediate claim against the seller? The answer is B, issue a title insurance policy with exceptions. In cases where a lien release is missing, title insurance policies can be issued with specific exceptions. This alerts parties involved of potential risks concerning unverified claims. In Connecticut, what could trigger a loan default during the closing process, resulting in delayed closing? Is it A, a change in borrower's employment status, B, a discrepancy in home inspection report, C, a reevaluation of property taxes, or D, the sale of seller's other property? The answer is A, a change in borrower's employment status. A change in the borrower's employment status could lead to a default under the terms of the loan agreement, requiring reassessment of the borrower's ability to meet loan obligations. What is the primary purpose of the closing disclosure in a Connecticut real estate loan closing? Is it A, to provide the borrower with their credit score, B, to detail all final loan terms and closing costs, C, to outline the benefits of future refinancing, or D, to inform the borrower about the property taxes? The answer is B, to detail all final loan terms and closing costs. The closing disclosure ensures consumers understand all final terms and costs before closing a loan. It is a requirement under the TRID guidelines, ensuring transparency during the loan closing process. Who is typically responsible for conducting the title search in a Connecticut real estate transaction? Is it A, the real estate agent, B, the lending institution, C, the attorney or title company, or D, the buyer? The answer is C, the attorney or title company. In Connecticut, an attorney or title company conducts the title search to confirm the property is clear of liens or legal issues, ensuring a valid transfer of ownership. Connecticut mortgage disclosure requirements. What is the primary purpose of the Connecticut mortgage disclosure statement? Is it A, to verify the buyer's employment history, B, to disclose lender's interest rates and fees to the borrower, C, to determine the property's market value, or D, to register the property with the local government? The answer is B, to disclose lenders' interest rates and fees to the borrower. The Connecticut Mortgage Disclosure Statement is designed to provide borrowers with detailed information on interest rates and fees, ensuring transparency in the lending process in accordance with state regulations. Which agency ensures compliance with Connecticut mortgage disclosure requirements? Is it A, Connecticut Department of Labor, B, Connecticut Real Estate Commission, C, Connecticut Department of Banking, or D, Connecticut Housing Finance Authority? The answer is C, Connecticut Department of Banking. The Connecticut Department of Banking is responsible for regulating state banking practices, including the enforcement of legal compliance with mortgage disclosure requirements. When must the mortgage disclosure be provided to the borrower in Connecticut? Is it A, within 3 business days after receiving the loan application, B, at the closing table, C, 3 days before closing, or D, 30 days before closing? The answer is A, within 3 business days after receiving the loan application. Connecticut law requires that the mortgage disclosure be sent within 3 business days after the lender receives the loan application, ensuring borrowers are well informed upfront about loan terms. What information is typically included in a Connecticut mortgage disclosure statement? Is it A, current market analysis, B, contract of sale, C, loan interest rate and associated fees, or D, history of previous owners? The answer is C, loan interest rate and associated fees. Connecticut mortgage disclosures include detailed financial information such as interest rates and any fees associated with the loan, helping borrowers understand all financial obligations before accepting. How does the CFPB regulate Connecticut mortgage disclosures? Is it A, by setting national disclosure standards that states can adopt, B, by directly overseeing all Connecticut mortgage transactions, C, by approving each mortgage application, or D, by offering housing loans directly to borrowers? The answer is A, by setting national disclosure standards that states can adopt. The Consumer Financial Protection Bureau, CFPB, regulates mortgage disclosures by setting national standards under laws like TILA, which states like Connecticut adopt to ensure transparency and consumer protection. Which section of Connecticut's state laws primarily governs mortgage disclosures? Is it A, Title 36 of the Connecticut General Statutes, B, Title 49 of the Connecticut General Statutes, C, Title 42A of the Connecticut General Statutes, or D, Title 8 of the Connecticut General Statutes? The answer is B, Title 49 of the Connecticut General Statutes. Connecticut General Statutes Title 49 addresses liens and mortgages, including specific disclosure requirements that lenders must follow. This ensures borrowers are informed about the terms of their mortgage. What is a key requirement for the Connecticut Mortgage Loan Disclosure Statement? Is it A, it must include the property's appraised value, B, it must detail the loan's interest rate and fees, C, it must list the borrower's credit score, or D, it must provide local real estate market data? The answer is B, it must detail the loan's interest rate and fees. Connecticut's mortgage disclosure requirements ensure borrowers receive crucial information about interest rates and fees, allowing them to make informed lending decisions.
Thanks for joining us today. If you found this video helpful, subscribe to our channel for more practice exams, tips, and tricks. And don't forget to visit birdsey.ai for complimentary study sessions with Birdsey, your AI-powered study partner.